This is your tech news briefing for Friday, September 9th. I'm Zoe Thomas for the Wall Street Journal. So many of the products and services we buy today rely on tech, running behind the scenes to deliver them faster, more efficiently, or directly to us, skipping the middleman. Forerunner Ventures is well aware of this. The 10-year-old venture capital firm concentrates on consumer-focused tech startups. It's invested in companies like fintech firm Chime, health tech brand Aura, and gamer platform MetaFi. But now, amid an economic downturn that follows the rush of VC funding that poured into startups over the last few years, how are VCs thinking about what to invest in next? And how can they help the startups they've already backed? To discuss this and more, we're joined by Kirsten Green, the founder and managing partner of Forerunner Ventures. Hi, Kirsten. Thanks for joining us.
Thank you so much, Zoe, for having me on today.
So, Forerunner typically invests in consumer-focused startups. Given inflation, given the kind of economic uncertainty we have at the moment, what kinds of things are you focused on now?
I think one of the things about investing in venture capital is you really do need to take a long view of the market. Our job is to think about what is going to be incredibly relevant a couple of years out, but has enough relevancy today that there's an early audience for it and to get traction. So we think very much less about what's happening in the moment in terms of the economic cycles and more about where's the consumer at, what does that maybe imply about the need or the opportunity going forward and investing into that.
We've heard from some other VCs that now is the time to batten down the hatches. There's been some real warning messages coming out from other investors saying, startups need to cut back after years of this big boom, this spending spree, hiring sprees. It sounds like you're not really in that camp, though.
We are in that camp, but I don't think that's just blanket advice for everybody to say, the world has changed, stop spending, start cutting. I think coming off of the last 2 years where we've been in a time period of tremendous growth, which has meant tremendous growth in team sizes, tremendous growth in marketing budgets, tremendous mandates to grow in general as companies, that sort of requires most everybody to take a hard look at those elements of their business and say, do we really need all of the spend that we've accumulated in the last 2 years? If we're in a period where it's not just growth, it's more holistic about all elements of your business. And with an asterisk around, you've got to figure out how to have some opportunity to control your own destiny. There's been a number of layoffs announced. I know people are looking, closely again at their cost structures. Decisions about people are really hard to make. They're personal, and they also, any team that grew quickly or hired a lot of people or any people spent a lot of time doing that. So these are, they feel like challenging decisions to make when you bring the human element into it. But in so many ways, it's, required right now as you think about how to, again, create the flexibility and the nimbleness in your business.
Are there areas that you've seen startups maybe more willing to negotiate on than they were over the past few months or few years?
It's interesting right now because I think what hasn't been as clear this year is the question around, how much negotiating room either side has on deals. And I think a lot of that has to do with the fact that companies raised a considerable amount of money over the last 2 years. And so there's been less businesses that I think have been in a situation where they need to raise capital. They've decided this is the right moment to raise capital. And I feel like that combination is really going to extend this question into 2023. I think there's going to be more companies in the market looking for follow-on dollars in 23 than there were in 22. And those are really the opportunities that will create the data points to understand how valuations have changed.
So what would you want to get from companies that are looking for funding in 2023? What kind of things are you looking to see and to get from them in return for your capital?
The focus, at least on our team, I think we've always focused on unit economics, even very early. Different environments require you to have more evidence of that than others. So even if you have an idea of like, okay, here's the business model, we kind of understand how this is going to play out, we can take some leaps in assuming on how it's going to play out. I think people are less willing to take those leaps and they want to see more proof points. And part of that is because I think that is not just the uncertainty in the market that maybe tests the belief, but it's just seeing how founders operate. Like, are they aware of the environment around them and balancing the right set of elements? And does that build conviction in their ability to grow a business in a state of uncertainty? Because nobody knows like how long this period is going to last or whatever. But like the real opportunity for everybody right now is to kind of demonstrate your execution capabilities and the real potential of your business based on fundamentals.
All right, I want to end by talking about a space that I've heard you're a believer in, the metaverse. Can you tell us a bit about that, maybe some of the investments that you're making, any opportunities that you see here?
Our North Star in investing is the consumer. We really think about what's going on with people, how are their lives changing, how are their needs changing, and then where can business solve those and address those. The metaverse is curious to us and interesting. It's another dimension. It's another way for people to engage and interact. I think we've been, impressed or at least inspired by many different potential applications. That said, it doesn't yet seamlessly integrate into consumer experience or people's lives. And I think that we really need to find a bridge to bring it into the broader mainstream.
Can you explain that idea a bit more, the bridge to consumers? What do you mean by that?
For instance, like last year, there was so much conversation and so much enthusiasm over NFTs. It captured entrepreneurs' imagination, it captured investors' imagination, and with the billions of dollars of transactions that happened on platforms like OpenSea and others, it clearly captured some people in the market's attention. I think, though, that there still remains a big question on okay, what is it? What do I do with this? What's the useful application of this? And I think that the bridge could be in unlocking something like an NFT that is less about an advanced JPEG and more about a tool for access to a loyalty program or to your, club membership that you bought or to, a different version of executing a subscription model. Something that is sort of we're doing elements of this today in other ways in a business. What blockchain or the technology that these NFTs sit on, for example, offers is a better way to execute those experiences with a twist that unlocks more potential going forward.
All right, Kirsten Green from Forerunner Ventures, thank you so much for joining us.
Zoe, thanks so much for your thoughtful questions.
And that's it for Tech News Briefing this week. Our producer is Julie Chang. Our supervising producer is Chris Sinsley. Our executive producer is Kateri Yoakum. And I'm your host, Zoe Thomas. Thanks for listening and have a great weekend.